All right. Welcome, everyone. Welcome to this episode of Market Wrap. I have with me Mr. Pankaj Pandey. And Nifty was not very bullish this week. We dropped slightly. Let's start from the top, sir. We have a lot to discuss, but let's start with what's the outlook right now on the markets?
Yeah, hi, good evening, Vishu. So this is one of those week where nothing major happened. Markets have been on the edge ahead of the possible US trade deal. And also, we are expected to see beginning of the earnings season, especially with the IT names. So nothing major happened in this week. Nifty dropped marginally 0.7% sectorally. There was some rotation. So pharma, which was sort of laggard, did well. Consumption did well. Defense again because of news related remained at the forefront. Whereas some profit taking was witnessed in real estate and financials. But net, I think the range is largely going to be similar. So support would be at 24,800 and resistance will be about 25,800. So if you look at Vishu, last 2, 3 months, we haven't seen much of a sharper correction in the market. So markets have been respecting this 20-day exponential moving average since then. And I don't see a chance that things are going to become bad unless something dramatic happens on the trade side. July, like I highlighted last time, is more productive month technically. Since 1991, 71% of the time it has given a return of 2.5%, which is a good handsome return. But yes, excitement is happening or has happened outside India, especially US this week.
Absolutely, sir. I think let's delve right into that first. Lots of news coming in from US. I think there was a US Vietnam deal that was just signed, and we also have the big, beautiful bill. So, what's our outlook on these two?
On US Vietnam trade deal, Vishu, I think, see what has come out is that for goods produced in Vietnam, the levy or the tariff rate will be 20%, and whatever is the transshipment of goods through Vietnam, the levy will be 40 odd percent. To me, this entire deal looks like is a sort of a deal which is primarily targeting China. And I think overall census, for example, when we look at first 5 month data, so China's export to US has declined by about 10%, but their exports to Vietnam has grown by 28%. And Vietnam export in parallel has grown to US by about 26%. So this largely looks like that China is shipping a lot of goods to US through Vietnam, and which is what US is looking to sort of block. And which is why, while it is still not clear the kind of value addition which will sort of qualify for this, but this 40% tariff, my sense is largely aiming directly or indirectly on China only, and which I think is positive for us. So anything big negative towards China is a relative positive for us. We live in a relative world. So my sense is that if India is able to sort of get under 20%, then I think it is a sort of a relative positive 10%. I would not be surprised if it gets announced towards the weekend. We could be seeing a gap up opening. But I think tariff arbitrage is clearly playing out in our favor. That is what I would want to believe. And since it is negative towards China, I think structurally it makes us very more bullish on a market like India.
Absolutely.
Hmm.
Right. And sir, how about the big, beautiful bill of Mr. Trump?
So yes, Vishu, everything does not look very beautiful in this bill. Spice is, if I sort of see it structurally. So while yes, see what it does is that US is already seeing a higher fiscal deficit of about 6 odd percent, and mind you, by 2035, it looks like this is going up to about 9 odd percent. Their debt to GDP is also going to sort of inch up. And it does not look like that Fed is in a mood to sort of cut rates because we are yet to see the impact of that on the inflation. So what it does structurally is that it makes dollar negative, because up till now, whatever has happened, that in case if any kind of a volatility, the money flows to the US, and which is why the dollar appreciates. And US market, both equities and debt have been sort of doing relatively very good, and which is what we call as exceptionalism. My sense is that all that is at risk because the safe haven demand for dollar could come under pressure because of this bill. Because structurally, it is moving your debt higher. The servicing cost is going to be higher. You're going to carry higher fiscal deficit. But what it also does is that it's negative dollar, but positive a lot of other assets. I mean, it could be other currencies, so be it euro or be it other currency. It could be positive for emerging market assets, both debt and equity. So I take this as a structural positive for emerging markets, including ours. I am not too sure how much money can come structurally, but it is definitely positive directionally. And at the same time, it is structurally negative for a country like US because a dollar would get impacted. So unless something dramatic does not happen, I would want to believe that it is a positive for us, but not so beautiful, especially for US.
Absolutely. Sir, the first quarter for FY26 has just gotten over. How does the outlook look like? What can we expect to see in this quarter?
Oh, yes. So coming to a big bank like banking, because see, banking is about 36-37% of the Nifty. Now, in the banking trends or the business performance is largely sort of mixed if I look at banking and NBFCs. So caution is continuing in a segment like credit cards, personal loans, and microfinance segment. But our sense is that one of the segments which can sort of see a positive side is the expected growth in credit to NBFCs from banks. I think that segment had taken a knock, and that is why one of the reasons why the credit growth is also lower in the system. So that can sort of be a positive surprise. And I think what we are clearly seeing is that the margin pressure is going to continue for next 2 quarters. This particular quarter, 3 to 10 bips kind of a margin pressure it can be very much visible across banks, depending on the kind of monetary transmission they have done or deposit mix or the extent of saving rate adjustment they would have taken. But PSUs, my sense is slightly better place. One, we have seen a 20 bips kind of a yield decline. So there could be a treasury gain, whether it gets reflected in PNL or in balance sheet. It is positive. The other is PSUs are comfortable on CD ratio perspective. So from that perspective, I think they are expected to do well. Now, in terms of numbers, I think IREDA came out with a good set of numbers, 27% AUM growth. Then HDFC Bank has been focusing on deposit growth, and which is why their CD ratio has now sort of come to about 96%. Tier 2 private banks, CSB did very well, about 32% growth. Within PSU Bank, I think Indian Bank continues to do well. That is one of our picks in the Shubh Muhurat. And then I think there are overall some signs of business momentum improving in MFI. So that is another thing which is looking good to us. Bajaj Finance on usual lines delivered a 25% growth. So numbers have been quite okay. I'm not highlighting the numbers which are not so okay, given the fact that we had a set of numbers. So this is on the banking side. Now on the IT side, because IT is the other sector which is a big boy, about 12 to 13 odd percent of the overall Nifty weightage. Now IT is expected to remain muted. Not really much of an excitement I do see for IT. So coming to say tier one names, TCS is going to report a decline of about 1% because of the ramp down in the BSNL business. Infosys might revise the guidance from 0 to 3% to probably 1 to 3% because they have acquired companies like MRE. Uh, Employee attrition is going has largely bottomed out because I think we all know that a lot of jobs are sort of at risk because of AI. Uh, but I think it is the tier two where things could be a lot more better. So, for example, Coforge is expected to deliver a growth of 5.5%. Again, there's a ramp up in one of their deals, which is expected. Persistence is again expected to do relatively better, 3.5% kind of a growth. So, I think these two companies are relatively looking to sort of do better growth. And also because of the fact that they have higher exposure on the BFSI side, where the overall spend has not been impacted so much. Manufacturing is something which is taken some knock, and which is why a lot of the other tier one names are sort of getting impacted. No major excitement expected from earnings from IT side.
Absolutely. How about auto sector, sir? I think June volumes are out.
Oh yes, Vishu. So same template is getting repeated. M&M continues to do well. So they've grown their SUV portfolio by 18 odd percent. They continue to do very well in the tractor side. TVS has done very well with a healthy growth of about 20%. So they continue to do relatively better than the other two-wheeler players. On the premium side, Aisha continues to do well. They are able to manage volumes of nearly 90,000 odd. One more thing is that the export leg is a lot better compared to the domestic side. I think auto is, we are still seeing some disappointment largely because while the tax cuts have been happened, we are yet to see a traction in the overall volumes. And which is why I think it's a very selective performance, what you see in auto. And mind you, this will get further aggravated because some of these companies sell EV versions also. So, for example, Bajaj is clearly saying that their output is going to decline by half from July 2000, from July next month. Ather is expecting 8 to 10% kind of a decline. TVS IQ model, the wholesale numbers are half of what they did in May. And this is more because of the rare earth issue, which is sort of continuing. So I think you'll see some impact in the volumes for some of these companies. Net, even non-EV side also, things have not been very great, except for the export leg. I think the only hope we would have is in the festive season when the monsoon sort of gets over. Till that time, probably we are yet to see meaningful bounce or improvement in the sales. So probably again, it will be a very selective performance in autos.
Absolutely. Sir, how about defense sector? I think there was another acceptance of necessity accorded recently.
Oh yes, I think this is one sector which is always in the news, either for domestic reason or geopolitical reasons. Yes, see, defense is continuing to see that structural improvement, and just to sort of highlight, between say 2013 to 2022, a span period of 10 years, the acceptance of necessity was given to 8.5 lakh worth of projects. Whereas in the last 3 years, which is FY23 onwards till now, acceptance of necessity has been given to 10.5 lakh. So what you did in the last 10 years, you have done in the previous 3 years. And from a ordering perspective, so what has happened is that last year ordering was about 2.09 lakh crore, which is FY25. A year before it was half of it at 1.08. And if you have given acceptance of necessity to nearly 10.5 lakh projects, so which clearly means that the ordering can go up to about 8 lakh crores in the next few years. And mind you, this year, the defense minister is clearly highlighting that they would want to curtail the ordering time also. So it is very much possible that this can happen even sooner also. The quantum also is large. You'll have typical beneficiaries like Bharat Electronics, Bharat Dynamics, Astra Microwave. In some segments, L&T and BHL also are expected to sort of benefit. The only challenge with defense is that this sector is liked by a lot of investors, so which is why it is at rich multiples, 14 times. FI27 is a very rich multiple. Wouldn't suggest to sort of chase these stocks at current levels. Possibly some price correction, time correction. I think that is when some of these stocks would look attractive. But yes, the long-term story in defense is largely intact and probably getting better.
Absolutely. How about infrastructure as a sector, sir?
So Vishu, yes, road has been sort of struggling for quite some time. I mean, while there is a need for a lot of these two ways or two-way highways to become four lanes, but if you sort of notice, we are not seeing much of our ordering or project awarding happening, and this is happening in the last 2 years. So last 2 years, the awarding has been under 5,000 odd kilometers. FY24, it was about 8,500 odd kilometers. And consequently, we have seen even the construction being muted at about 10,400. In FY25, it was about 12,300 in FY24. And why is this happening is that NHA was sitting on a debt of nearly 3.35 lakh crore, which has sort of come down to about 2.44 because in FY25 they monetized somewhere about 28, 29,000. and they want to monetize nearly 30,000 in FI26 as well. So I think till the time this monetization happens, probably the awarding is expected to be lower. But like I said, opportunity pie is fairly large, and I think we are seeing some tweak in the model also. So no longer NHAI is or Ministry of Surface Road Transport is going to award more of EPC projects because that is where a lot of cash is required. Rather than they'll be focusing now on HAM and DOT projects. But yes, and which is why the outlook for some of these companies have been lackluster. They've been looking to sort of diversify the book. But still, if I have to highlight, I think probably PNC looks attractive. I think they are sitting on a cash of about 3,000 odd crores. Track record has been good. HG Infra is another name which is looking quite decent. But I think besides road, a lot of building projects are going on. So which is why I would want to highlight companies like say PSP. Now, ideally, this company should benefit a lot more because under Adani's ownership, it could sort of get a lot of projects. And they are, in fact, looking at 10,000 worth crore kind of an opportunity in the next 2 years. And another one is Ahluwalia, which is very well managed. So this is another company which is a good play on real estate, hotel, hospital cycle. So one needs to also sort of diversify and rather than sort of looking at only road specific players, probably a wider gamut where people are involved in the, for example, in the building segment as well, because the road segment might still take some time, probably a quarter or two or a bit longer to sort of come back in full force.
Right, sir. Sir, I think Apollo Hospitals also announced a major restructuring. Now, those who are, and which relates to the demerger of their pharmacy business. Now, those who are invested, which of these options does look better to you?
So yes, Apollo is sort of demerging the business. So very crudely, if I have to say, the embedded value of the pharmacy business is about 20% of the Apollo's market cap. So what they are doing is the online retail pharmacy business and the wholesale pharmacy business. It is going to be sort of brought under a single entity, and this process itself could take 15 to 18 odd months. Only thing is that see from a business perspective, hospital is the bigger pie, and we have always traditionally liked hospitals more. And I think it is Apollo Hospitals forte. So I would prefer hospital business. But nevertheless, the pharmacy businesses are expected to do well because what the company is guiding is not now from say 16,000 odd crore kind of a revenue. They would sort of go up to over 25,000 odd crores in the next 2 years. So growth is fairly large, but this is a business which generates lesser EBITDA margins, but asset turnover is higher. Uh, uh, but I think one fallout of this could be that it's a Nifty stock, and it is very much possible that over a period of time, this might sort of move out of the Nifty because the valuations will come down. No longer you are going to see an entity which had a market cap of in excess of 1 lakh crores. But for me, structurally, hospital is a business which is prone to lesser disruptions. So from that perspective, that is a business I will prefer from a portfolio perspective.
Right. Sir, on one hand, when Apollo is demerging its pharmacy business, Torrent is acquiring JB Chemicals and Pharmaceuticals. How does one look at this deal?
Oh yes, a lot of corporate restructuring or M&As. So in this particular, with this acquisition, Torrent will become the fifth largest player. And see, Torrent is a very well managed company, commands very good multiples, has got pretty good margins. This is one of the few companies which delivers a pretty steady growth and commands pretty good multiples. And they have been acquiring companies because of the growth aspiration they carry. And this JB Chemical deal is I think at a valuation of about 5 times FI27 sales, which according to us is fair because JB Chemical also has been fairly good managed. This is the company which generates an EBITDA of nearly about 25, 26%. So from that perspective, it's a fair this thing deal. No immediate benefit I would expect from this deal because both the entities are very well managed. I think the synergies or possible benefits can accrue in the longer term only. But yes, I think Torrent can be a portfolio pick in the business. It's largely a good play on the domestic side. They've got one of the best productive set of MRs, and JB Chemical also is on the similar lines. So two well-managed companies are merging together. No immediate benefits, but benefits will accrue in the long term.
Right, right, sir. Sir, I think Ambuja Cement also announced some big plans ahead. What were the key highlights?
So I think Ambuja, in their recent interaction, actually gave some insights which I would want to sort of share. One, I think clearly what they're saying is that last year, FI25 was a bad year. The cement demand grew by 4%. But what they're expecting is now the demand for the next 4 5 years is going to be 7% CAGR. And this is higher than the supply CAGR of 6 odd percent, which means that the capacity utilization levels are structurally expected to go up. And it also means that the pricing is also going to go up. And which is why they're guiding that their EBITDA per ton is expected to sort of improve from, say, 789 to nearly 1500. So they're looking at a reduction in cost plus higher share of premium products to the tune of about 500 rupees per ton. So all in all, what they can deliver is a 15% revenue CAGR and about 30% kind of EBITDA CAGR, because and they're also looking to sort of up their market share to about 20 odd percent. So I think cement, with their commentary, what I can probably see is that the worst is behind us. You will see better prices, you will see better utilization, you will see cost or efficiency improvement. And that is going to pan out for a lot of players, not only for Ambuja. And on one more thing is that they have acquired a number of companies. I think eventually they'll have only one business, one company. So Ambuja is what is they are going to sort of keep. A lot of these entities will get merged over a period of time. So from a portfolio perspective, if someone wants to hold, it should be Ambuja.
Absolutely. And so then comes Gabriel India. I think Gabriel India has also announced some restructuring amongst its entities.
Yeah, so this week has been a week of restructuring and M&As. But very quickly, if I have to highlight, see, Gabriel is a part of Anand Group, fairly large in business, 20,000 odd crores. The listed entity, Gabriel, had a sales of about only 4,000 odd crores. So what they're doing is that the auto business, they are sort of consolidating into one particular business. And now from a number perspective, this restructuring is very fair, because what is happening is that whatever companies they are bringing into the listed side, the profit is somewhere about 180 odd crores. So that is the profit which is going to increase. And this for this, they are demanding a multiple of about 13p, which I think is very attractive given the fact that Anand or Gabriel as a group, as a company, has been doing very good in shock absorbers, plus on the sunroof aspect also. So I think it's a very fair deal from a minority shareholder perspective. While the stock has rallied, so there is obviously no room for it to sort of rise further. But we like the transaction, and which is why I'm highlighting this, that this transaction has happened at a very fair price from a reputed group, and which is why I think this company has been relatively doing better than the lot of ancillaries because of better CG.
Absolutely. And finally, sir, it's time for the hidden gem of the week. Which will it be this time?
So what I'm highlighting is that a lot of businesses have seen some impact in the last 1.5 years, and now we have monsoon. But post monsoon, a lot of recovery is expected. So I think what I'm highlighting is, or what I would recommend is Astral with a target price of 1830. Now this is one of the top 5 players in the domestic plastic piping industry, and they are one of the bigger players in the CPVC side also. Now, historically, they have grown at about 12% CAGR compared to industry growth, and which is why they've gained market share over a period of time, because industry has been growing at 9 to 10 odd percent. So that way, they have always done better than the industry. Now, the reason for liking this company is that post monsoon, we would expect overall construction activity to sort of pick up, and which is where the demand for piping is expected to pick up. On top of it, because of the volatility in prices, because what had happened was that the PVC prices had sort of shot up or literally doubled post-COVID because of the demand-supply mismatch, and now it is sort of normalized. So post monsoon, our sense is that inventory filling will also happen in the system. So inventory has gone down in the system from to 1 week. Typically, it is 4 weeks. So you'll have inventory which will get sort of filled. On top of it, the demand is expected to be better. So our sense is that over the next 6 to 12 months, this company or this segment, entire segment, should do better. And what a better name than Astral to sort of recommend. We would expect this company to sort of deliver a earning growth of about 17%, profit of about 25%. This stock always trades expensive, has been a 100 bagger in a certain time frame. So one of the best wealth creators we have also seen. So from that perspective, I think since times are not so great at this point in time, I think that is a time to sort of pick a stock like this.
Absolutely. Well, that was it this time. Thank you so much, Pankaj sir, for those insights. And thank you so much, everyone, for watching. We'll be back next time. Till then, if you have any questions, please put them down in the comments. Thanks again.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.